I do think the market as a whole, sentiment-wise, because of all the things that are fairly obvious, Fed's cutting rates, markets making new all-time highs, earnings are growing, that maybe people should be ready for something that occurs. I mean, I can't remember the last time, and I'm normally pretty good with bringing out stats, but I'm going to say something that I just know. September was an up month. For September, October, November, December to not have a correction of, say, 4% is almost impossible in my mind, meaning I don't know how many times in history during those 4 months, because usually either September or October, there's a correction. Sometimes it can go in November, seldom in December, but also possibly there. I think we're going to get a wake-up call for people. So when you hear stories like this, I think it's a mini sign of COVID. Like, if we're going to keep throwing money, and I think they have to, because the bottom end of the economy is not seeing anything good happen.
Gold and Bitcoin have quietly become the year's top performing assets, and that's something we've never seen before. Jordi Visser points out that while most people don't own either, institutions are finally starting to pay attention. Morgan Stanley's Global Investment Committee recently approved crypto allocations between 2% and 4%, though they've said they'll rebalance quickly if Bitcoin climbs too far too fast. It's a cautious step, but it signals a major shift in how traditional finance views alternative assets. Visser explains that the appeal is simple. Bonds have been awful against inflation, and while stocks have held up, global markets have outperformed the US. This year, Bitcoin is up roughly 33%, more than double the S&P's gain. For banks and large investors, that performance is hard to ignore. They're slowly moving toward what Visser calls the debasement trade, owning assets that can hold their value when governments print more money and currencies lose purchasing power. He also draws a connection to what happened during the stimulus era. When those checks went out, they pushed asset prices higher but did nothing to fix the underlying structural issues. Someone who put that money into Bitcoin under $10,000 would be sitting on life-changing gains today. Most, though, spent it just trying to stay afloat as inflation drove up costs for housing, food, and essentials. According to Visser, that inflation wave permanently reset prices higher. And now, with gold and Bitcoin leading again, it's clear people are still looking for protection from the same problem. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
For the first time, and obviously in Bitcoin's history, the number one and number two assets are gold and Bitcoin year to date. The reason that's a problem is, as much as, it seems like people would own gold, the majority of people do not own gold. The majority of people do not own Bitcoin. I think with the changes we're seeing, like Morgan Stanley has their global investment committee has approved crypto. And I think they said an allocation of 2 to 4% makes sense. They did put a disclaimer I love, which is, but we'll be very aggressive with rebalancing, meaning if Bitcoin goes up a lot, we're going to sell out of that and rotate back into the others. I think the problem is bonds have been a horrible investment relative to inflation. Stocks have been good, but it's been more about global stocks this year, where people are not as overweight as they are in U.S. stocks. And U.S. stocks have been okay this year. But again, I think when we talked last week, at the peak this week, I think Bitcoin was up 33% when it got to 125 year to date. Well, at 33%, the S&P was up 15%. So you're still doing 2 times this year. So I think this is a way for the banks to kind of edge into. I think you need to have the debasement part of your portfolio, which would be gold and Bitcoin. And I think this is a way to get the FAs to have the conversation. That would be my guess, because it's funny, and I posted something about this week. For every person saying that AI is a bubble or that the stock market is a bubble, they're also positive on gold, and they don't say that's a bubble. So it's like, okay, the miners are up over 100%, but that's not a bubble. So the irony of all of this stuff is, for people who are bearish, they've accepted gold. I think for people sitting at home that are retirees and people that are doing asset allocation, I think the debasement part of the portfolio, which, to give him credit, I mean, Darius Dale's talked about this forever. He's had gold and Bitcoin as a big part to replace bonds. You need to have some of that. So I think this is the bank's way of kind of catching up to Darius. Michael Saylor talks about that. Jeff Booth talks about it. It's something that, as a macro person, I needed to hear, which is, when you print money and you allow innovation to go at this fast pace and Moore's law kicks in, it's meant to eventually displace jobs. And so Bitcoin, relative to housing, if you took all of the money that you got from the government and you put it into Bitcoin, I don't think people would want to know what it's worth, because Bitcoin was down below 10,000 and now it's at 125. So if you put that money in Bitcoin at that point, it would have gone up significantly, much more than the housing went up, much more than your food prices went up, much more than all this stuff. So I think the problem is you get a massive surge in inflation. So your costs are reset higher. You get all this money for your job, and guess what? You spend it all. You're playing catch up from that point on. And I don't think that people fully grasp that that event had a huge impact on the way that this debasement trade is going. I think people are finally starting to understand, the majority of the country, which is why we're going to have an election in New York City. And now he's up to 89%. Young people can't afford to live in the city that they want to live. And their parents are worried because they're having to help them with being able to live and come out of school, where now they're not getting hired out of jobs. It's a very, very combustible situation for the young people. So debasement to me all starts back there. And what Bitcoin and gold are part of is the fact that if you're just going to keep printing, I need something that isn't paper. I need something that actually can keep up with the assets that you're forcing higher to keep us when we have a time of debt. It's all linked together, but to me, it really comes back to COVID and this whole sentiment thing for younger people. I'm just trying to think whether I think it's more likely in the next 9 months. Again, I think there's going to be cash handouts to people. I think we're at some point, and again, I want to say this because I do believe the market, I heard you speak this week, and for everyone who's trading and getting involved, there's a big difference between Micron being at $60 and being at $200. At some point, you've built in at least a lot of the good news for the near term. I do think the market as a whole, sentiment wise, because of all the things that are fairly obvious, Fed's cutting rates, markets making new all-time highs, earnings are growing, that maybe people should be ready for something that occurs. I mean, I can't remember the last time, and I'm normally pretty good with bringing out stats, but I'm going to say something that I just know. September was an up month. For September, October, November, December to not have a correction of, say, 4% is almost impossible in my mind, meaning I don't know how many times in history during those 4 months, because usually either September or October, there's a correction. Sometimes it can go in November, seldom in December, but also possibly there. I think we're going to get a wake-up call for people. So when you hear stories like this, I think it's a mini sign of COVID. Like, if we're going to keep throwing money, and I think they have to, because the bottom end of the economy is not seeing anything good happen. I mean, I don't know what else to say to people. If the job situation is not good, if sentiment is low, and if we're seeing things blowing up in kind of auto loans, if we're seeing things in student loan delinquencies, you still have the bottom half of the economy that's suffering. And I think there's going to be something that happens in the short term. So a warning sign to everyone trading stocks: be prepared for some kind of a correction between now and the end of the year.
Jordi Visser says another round of government cash handouts is likely as policymakers look for ways to support weaker parts of the economy. But he warns investors not to get too comfortable. Markets have been on a strong run for months, and historically, a correction of at least 4% between September and December is common. With stocks sitting at record highs, rate cuts on the horizon, and early signs of financial stress, especially in auto and student loans, a short-term pullback wouldn't be surprising. Visser points out that this kind of environment can be tricky. Investors tend to assume momentum will keep carrying everything higher, but the combination of slower growth and stretched valuations makes the market fragile. A small shock, whether from disappointing earnings, higher unemployment, or a policy misstep, could trigger a quick reset. On a completely different front, Visser notes how fast the AI race is heating up. Just yesterday, Figure AI unveiled its new Figure 03 robot, seemingly trying to beat Tesla to the spotlight ahead of its next big reveal. The demo video was impressive: smooth movement, human-like coordination, and real-world functionality. According to Visser, this is shaping up to be the next major tech competition, unfolding right before our eyes. Let's get back to the interview.
I haven't said this publicly, but I'm going to go on record. I could be wrong. I'm going to be a weasel. I'm going to be weasel, and I'm going to give myself an out. But based on the facts I know today, and I reserve the right to change my mind, based on the facts today, Andrew Cuomo is going to be the mayor of New York City. Mom Donnie's not going to win.
Wow. So, okay, you've got some good money to make off that. I mean, if we're 90% in poly market right now,
Yeah, maybe I should.
Yeah.
I've never, I'm kind of an all or nothing guy, so I've stayed away from actually investing in the prediction markets. But I might go set up an account and see what happens there.
That's like buying Open Door at 1 and watching it go to 10. I mean, you're getting a payoff that's big.
Yeah. The reason is momentum in the polls, and I think that actually, that feeling of like helpful or helplessness that was the initial surge, the stock market and everything going higher, there are more people who are benefiting in this city in particular from all of that, where that felt really bad in April and May. Like, hey, actually, this isn't working. I think there's a lot of people say, actually, the system, I got a couple more shekels in my brokerage account than I thought I did before, right? And so, in a weird way, the stock market is helping Cuomo over Mamdani, and it's like this release valve of a lot of that helplessness. Where I do think that he would have won in the summertime before we got the kind of bubble blow off top excitement, bull market, whatever you want to call it now.
I think what you need to do is on this Saturday, go take a cruise to Williamsburg, where I live, where the hipsters are. Walk around. You might feel a little differently. There might be a few more people in that town in the younger part of the city that are 100% on the opposite side. So you might be feeling a change in Manhattan with the people you're dealing with. But you're actually, you're getting on the older side now. Now you got to kind of come back to Williamsburg and join the younger crowd.
All right, I'll do my trip around Manhattan. Let's talk about humanoid robots. There's tons of. I mean, this is like Fast and Furious news at this point. I think you mentioned something earlier that I've noticed. There's 4 or 5 guys that I know that are very much in this trade. Chris Camello, Andrew Kang, right? A couple of these guys. They all keep hinting at, I've seen the future and it's not yet public, and I'm trying to put more money in. That's usually a pretty good sign something's happening behind closed doors that is exciting or innovative. What's your read on the humanoid space right now?
I mean, I wrote a piece on Tesla back in the summer because I think you and I, because X is our dominant way of gathering news and information, the brain is really good about connecting dots as information just kind of overflows, this crowdsourcing part. Our brains are good for that. Like, if you're good as an investor, you're like, this is not the first time I've heard this. And the way you described it is what I felt with Tesla. I'm like, I can't name all the things to you guys about all the tweets and all the podcasts, but I get the impression that we're much closer to this humanoid thing, whether it's robotaxis, which are, again, humanoids on wheels, or where we're making a big advancement here. So I've noticed the same thing. First of all, I listened to Chris Camillo's Dumb Money podcast. And I got to be honest with you, he was fairly negative on Optimus. Even at your event, he wasn't negative, but he just didn't think they were as close as people did. He was the one that, kind of was the nail in the coffin for me as to, I think there's something people have to pay attention to. So what he highlighted was, number one, the shareholder meeting is coming up for Tesla on November 6th, I believe. And on the cover of the invite is an Optimus. He had this huge pay package that was set up, which again, to me, if that's the way it's going to be and they're doing this, they must believe it's coming soon. I've talked about Gavin Baker and Brad Gerstner and Jensen Huang of all over a 4-month period said, this is going to be the biggest industry that the world has ever seen. So what Chris said was, I don't know if the November 6th, he's going to wheel out Optimus 3 or not, because no one has seen Optimus 3. Optimus 2, there's a Kung Fu video. Crazy on there. But there's 2 Kung Fu ones. One is inside the Tesla thing that reportedly was filmed by Musk. But then at the Tron event, there was another one. And that one, no one knows for sure, but it looks like 2.5. So the question Chris said is, if he shows 3, that's a big deal. Now, yesterday, Figure AI showed Figure 03, which to me would be like we're seeing with the AI models, which is, let me get in front before they do something so that everyone saw and I don't know if you saw the video with Figure 3, incredibly impressive. If Elon Musk is willing to show it, not on a video, but at an event, If he does show Optimus 3 and the advances that he made, then all of a sudden you have to take that entire multi-trillion-dollar valuation, you have to start to move it up for the entire humanoid space. And I just want to remind people, when Steve Jobs demoed the iPhone, I mean, arguably this is far more important. And that's what Chris was saying. He's like, this is an asymmetric event now. Mm-hmm. If he does show Optimus 3, I want to be invested in Tesla for the event. If it comes out and it's another, thing where Elon is showing 2.5 and we leave disappointed, the stock will fall $30 immediately. But he doesn't want to miss the chance that this thing could be an asymmetric event. So I just think people should pay attention to two things. Number one, fading AI is like fading the compounding side. You can't have humanoids without the AI movement that we've had. Every day that the AI movement continues to move forward means humanoids are coming closer and closer to that event. And you want to know what the TAM is on that immediately. And I think that's the big event. And so Figure doing this, them doing this. And so everyone remembers, Chris is involved with Apptronic. I mean, he knows this space as well, if not better than anyone.
Strangely enough, the two assets once seen as complete opposites, one ancient and one digital, are now moving in rhythm. Their rise hints at something deeper than speculation, a quiet rebellion against the erosion of value itself. As traditional markets stretch higher on borrowed confidence, gold and Bitcoin are drawing strength from distrust. Institutions, long anchored to bonds and equities, are slowly testing waters they once dismissed. The return of fiscal handouts, rising debt burdens, and a brewing correction all feed into the same narrative. People and policymakers are still trying to paper over structural cracks with short-term fixes. Yet through all the noise, one message stands out. Money is changing shape again, and this time, the shift is coming from both the oldest and newest stores of value. Will the next chapter of wealth preservation belong to those who trust in tangible metal, those who believe in digital scarcity, or those willing to hold both as the world searches for financial balance? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.